All right, so today we're going to be looking at tax lay investing.
Okay.
And this is something that listeners have been asking about.
Interesting.
Yeah, and I've kind of been wondering about it myself too, to be honest.
Really?
So we're going to be looking at a couple of sources today. We've got investment news,
Okay.
and we're also taking a look at Investopedia.
That was good.
Yeah, so we're going to try and figure out, like, how does this work? Is it a good idea? Is it a bad idea? What are the pluses and minuses?
hmm
So let's just get right into it. So what is a tax lay?
Well, it's basically like when a homeowner doesn't pay their property taxes,
Okay,
the local government can put like a claim on that property.
right.
It's kind of their way of saying, hey, you owe us money.
Gotcha.
And that basically opens up this opportunity for investors.
Okay, so then how does an investor get involved? Because investment news had this whole process laid out.
Yeah, so it starts with the homeowner missing their tax payments.
Okay.
Then the local government issues like a tax lien certificate,
Right.
which is kind of like an IOU
Gotcha.
for those unpaid taxes.
Okay.
Then they auction those certificates off.
Wait, so I could like buy someone's debt?
Yeah.
That's kind of wild.
It's a pretty interesting concept, right?
Yeah, so if I do that, do I automatically own their house or?
So there's actually two ways that this can play out.
Okay.
You can actually bid on the dollar amount
Okay.
of that tax certificate, or
Okay.
you can bid on the interest rate
Okay.
that you're willing to accept.
So like there's like a bidding war, but instead of it being for like an antique or something, it's for someone's unpaid taxes.
Yeah.
Interesting. So, and then what happens after I win the bid? Do I just like go get the keys to the house?
Well, you get the tax lien certificate, which is basically proof that you paid the taxes,
Okay.
and you have a claim on the property.
Right.
However, the original owner has a chance to pay you back those taxes plus interest,
Okay.
and they can keep their home.
Okay.
That's called the redemption period.
Okay.
And most homeowners will actually pay up during this time.
Oh, right.
So foreclosure is relatively rare.
Oh, so it's not quite as cutthroat as it sounds. It's
Uh-huh.
more like I'm providing a financial service and maybe I'll earn some interest along the way.
Yeah.
Okay. But of course, like getting that house is like the whole draw for most people, right?
Of course, it's a pretty big incentive.
Yeah, for sure. So, how do I find these tax layer auctions?
Oh, a lot of it's online.
Okay.
Some states actually have dedicated sections on their websites just for these auctions.
Oh, wow.
They even have like investment news mentioned, like over-the-counter online tax sales
Oh, wow.
in Washington, D.C.
So anybody can just go on there, even if they're not like a big time real estate investor.
That's the beauty of it. It's accessible to a lot of people.
Okay, but not every state does this.
No, not every state uses these public auctions.
Okay.
For example, Texas
Mm-hmm.
only auctions properties that have already been foreclosed on.
So it really depends on the location. Okay, cool. So let's get down to the pros and cons of this. What's so great about it other than the whole getting a house for super cheap thing?
Well, there are a lot of benefits to tax lien investing.
Yeah.
One of them is it's very easy to get into.
Okay.
You don't have to have a lot of money to get started.
Okay.
Maybe a few $100 or a few thousand.
Right.
Versus like, a down payment on a house.
Okay, that's huge.
Yeah.
So it opens it up to more people for sure.
And then you've got the potential for high returns.
Yeah, like I read somewhere that Florida had like 18% return or something like that.
Yeah, some states have really high interest rates.
Okay, so that's pretty appealing.
And then, of course, there's that possibility that you'll end up with the property itself, like
Sure.
getting a house or a piece of land
Yeah.
for just the price of those back taxes.
Yeah, that's the dream.
It's definitely a big draw for a lot of people.
Yeah. Okay, so we've heard the good. What about the not so good, the downsides?
So there are some risks involved, and it's important to know what you're getting into.
Okay.
One of the downsides is that it can be expensive to foreclose on a property,
Okay.
even if you get it at a bargain price.
Okay.
The legal process can be a real hassle.
Right, Investment News was saying it can be a time-consuming and expensive process.
Yeah, you have to factor those costs into your calculations.
Yeah.
And then there's the potential for ending up with a problem property.
Oh, right.
Like Investopedia had a story about that subprime mortgage crisis where a lot of foreclosed properties turned out to be more trouble than they were worth.
Oh, so it's not as simple as like buy low, sell high?
No, there's definitely more to it.
Okay, so what else do I need to watch out for?
Well, you need to be careful about getting stuck with a property that's hard to sell.
Okay.
Investopedia had this kind of funny anecdote about a piece of land that was super narrow, like 2 feet wide but 4 miles long.
What?
And so it was basically unsellable, even though the tax lien seemed like a steal.
Yeah, so you really have to do your research before jumping into an auction.
Absolutely.
So, one thing I'm wondering about is, Unlike stocks or bonds, there's not really a market for these tax lien certificates, right?
Right.
So if I need to get my money out quickly.
They can be very difficult to get rid of.
Oh.
So you really have to be in it for the long haul.
So liquidity is definitely something to consider.
Yes.
This sounds like something that requires a lot of planning and a long-term perspective.
It's not for the faint of heart.
No, for sure.
Yeah.
It sounds like it's for people who have a high tolerance for risk and know what they're doing.
It's a specialized strategy for sure.
Yeah, so it's really about figuring out if this is the right fit for you and your investment style.
Exactly.
Cool. Okay, so we're going to take a quick break.
Right.
And then we'll come back and we'll look at some other options that you can use with this tax lien strategy.
That was good.
All right, we'll be right back.
Okay.
So, one thing I was thinking about is we've been talking about these certificates,
Yeah.
but there's like real people behind these,
Absolutely.
right? Like these aren't just pieces of paper.
It's easy to forget about that.
Yeah, and investment news really drove that point home for me.
It's a good point.
Like, it's one thing to be talking about returns, but what about the people who are like maybe losing their homes because of this?
Yeah, you have to think about the potential impact on the homeowner.
Right, like maybe they lost their job or had huge medical bills.
That's a tough situation.
Yeah, and so then as an investor,
Yeah.
you have to kind of decide, like, are you okay with profiting off of someone else's misfortune?
That's a really important question.
Yeah, like some people might see it as just a business transaction, but some people might not be okay with that.
It's a personal decision.
Yeah, Investopedia said something about how this might not be a good fit for ESG investing,
Right.
because of the social impact.
Exactly.
So it's not always just about the money.
It's about values, too.
Yeah, for sure.
Yeah.
Okay, so even if you are okay with all that, there's still all those like practical challenges.
Right.
Like, what if I end up with a house that's falling apart?
That's why due diligence is so important.
Yeah, Investopedia really emphasized that.
You can't just buy any tax lien you see.
So what does that mean? Like, what does due diligence actually look like?
What goes beyond just looking at the numbers on the certificate?
Oh.
You need to research the property itself.
Oh, so like actually go see the property.
Yeah, you want to see in person,
Okay.
get a sense of its value, its potential.
Right. Like, is it a fixer-upper or is it a total disaster?
Exactly.
It's like that whole saying, if it sounds too good to be true,
Yeah.
it probably is.
Investment news warned about those problem properties.
Oh, yeah, like that super narrow piece of land we talked about.
That's a great example.
Yeah. Okay, so what are some like red flags I should be watching out for?
No, signs of neglect are a big one.
Like if it lives abandoned
Yeah, that could mean the owner isn't coming back.
and then I'm stuck with it.
Exactly.
Okay, what else?
You also want to be aware of potential environmental issues.
Oh, right, like
Thanks, Jane.
hazardous material.
That can be a nightmare.
Yeah, for sure. Okay, so like I need to look at the property, the location, the condition, any environmental problems.
And don't forget about title issues.
Oh, yeah.
Make sure there aren't any other liens or claims on the property.
So like I could win the bid and then find out someone else already has a claim?
It's a possibility.
Okay, so do your homework
Absolutely.
before you even think about bidding.
It'll save you a lot of headaches down the road.
Okay, well, this is starting to sound kind of overwhelming.
I understand.
Like, especially if you're new to this whole real estate thing.
It can be a lot to take in.
So what can you do if you need help?
Well, the National Tax Lien Association can be a good resource.
Oh, yeah, the NTLA.
They can connect you with experts and provide some guidance.
Okay, and a good financial advisor can help too, right?
Absolutely. They can help you assess your risk tolerance and figure out if this is the right strategy for you.
Okay, that's good to know. So we've been talking a lot about the money side of things.
Yeah.
But I'm curious, are there any reasons someone might be interested in this that aren't about profit?
That's an interesting perspective.
Yeah, like Investopedia didn't really talk about that, but I was thinking about it.
I think there were definitely some non-financial motivations.
Like what?
Well, some
Yeah.
people might see it as a way to contribute to their community.
How so?
Well, by purchasing these tax liens, they're helping the local government collect those delinquent taxes.
Oh, okay.
And that money can then be used to fund essential services.
Right, like schools and roads and stuff.
Exactly.
So it's like, I'm doing my civic duty.
in a way.
Yeah. Oh, what else?
Well, some people are just drawn to real estate.
Yeah.
They like the idea of owning property,
That tangible asset.
Yeah.
And tax liens can be a way to get into the market.
especially if you don't have a lot of money for a down payment.
Right. Okay,
But,
cool.
yeah.
So it's not always just about making a quick buck.
There are other factors at play.
Yeah, it's really interesting. So as we kind of wrap up this part of our deep dive,
Okay.
what are your thoughts so far? What's resonating with you?
Well, I think it's important to remember that tax lien investing is a complex strategy.
Yeah,
It's not for everyone,
for sure.
but it can be a potentially rewarding option
Mm-hmm.
for those who are willing to do their research and understand the risks.
Absolutely. Okay, so we'll be back in just a minute,
Right.
and we're going to be looking at some of the factors that might influence your decision to invest in tax liens or not.
Sounds good.
All right, so we're back. And I've been thinking, you know how we were talking about how tax lien investing is different for like different people?
Yeah.
Like it really depends on what you're trying to get out of it.
Right.
And investment news, I think they were talking about that a little bit when they were comparing tax liens to those other options.
Yeah, they had that table, remember?
Yeah.
Comparing tax liens to REITs and like directly investing in properties.
Right. And it kind of showed how each one is like good for a certain type of person.
Yeah, like it's like picking your own adventure in real estate investing.
Right. So let's say you're someone who's like all about the big returns,
Yeah.
but you don't want to deal with the hassle of owning a property.
Yeah.
Then maybe tax liens are a good fit for you.
Right, assuming you've done all your research.
Yeah.
And, the risks involved.
Right. But what if you're like, I just want something that's kind of like safe and stable?
There maybe REITs are better.
Right. Like you still get some exposure to real estate,
Mm-hmm.
but you don't have to deal with being a landlord.
Exactly.
And it's easier to buy and sell those shares if you need to.
Yeah, they're more liquid.
Right.
Yeah.
Okay. And then there's like the old school way of just like buying a rental property yourself.
Yeah, the classic approach.
Right. So that's obviously the most hands-on,
Hmm.
but you get the potential for that long-term growth.
Right.
And you get that rental income every month.
Yeah, it's a steady stream of cash flow.
Right. So it really all comes down to like what you're comfortable with.
Right. Your risk tolerance, your investment goals.
And that's why it's good to talk to a financial advisor.
Yeah, they can help you figure out what makes sense for you.
Yeah, like they can tell you if you're being realistic about the risks.
Yeah, and they can help you with all the complicated stuff with tax liens.
Right. Like there's a lot of legal stuff involved.
Yeah, it's a specialized area.
So having an expert on your side can be really helpful.
Absolutely.
So, one more thing I wanted to touch on is the whole ethics thing.
Yeah, that's an important consideration.
Like, it's easy to get caught up in the money part of it,
Mm-hmm.
but we have to remember that this can really affect people's lives.
Absolutely.
And Investment News was really good about talking about that.
Yeah.
Like, they were saying that this might not be right for everyone.
Right.
Especially people who are really focused on those ESG principles.
Yeah.
Yeah, it's not just about the money, it's about doing what you feel good about.
Absolutely.
And even if you are okay with it,
Yeah.
you still got to be sensitive to the people who might lose their homes.
Right. You have to approach it with respect.
Yeah, these aren't just numbers. These are people's lives.
It's a human issue.
So as we wrap up this whole deep dive, I want to leave you with a question.
Okay, shoot.
We talked about all the like financial stuff
Yeah.
and the risks and all that. But what about the things that aren't about money?
Okay.
Like what would make you personally want to do this or not want to do this?
That's a really interesting question.
Yeah, like, is it the chance to own property?
Mm-hmm.
Is it the chance to, like, help your community?
Mm-hmm.
Or is it just, like, the challenge of figuring it all out?
Whatever it is, it's important to be aware of your motivations.
Right, like, know why you're doing something.
Exactly.
So, listener, keep thinking about this stuff. Like,
Yeah.
does this fit with your goals and your risk tolerance?
Your values.
Yeah, and we hope this deep dive has given you the information you need
We covered a lot of ground.
to make an informed decision.
Yeah.
So until next time, keep learning, keep exploring.
Stay curious.
We'll see you then.